When most business owners start their business, they start either as a sole proprietor or an LLC or even a C corporation. Most CEOs don't think that an S corporation will benefit them until they realize the benefits of becoming an S corporation. And no business becomes an S corporation automatically. Well, in this episode, I will show you how to convert your business to an S corporation and the benefits of becoming an S corp. Stay tuned. Welcome to Say Yes to Profits. Here at Say Yes to Profits, we help consultants build million-dollar firms while tripling their cash flow and profits without stress, struggle, or burnout. Now, our goal is to make you smile when you log into your bank account because you have more money, more profits, and you're paying less taxes. So subscribe, follow, and listen up. And as a result, we will make it rain money in your business. Now join me on the path to say yes to profits. Hello everyone, I am Octavia, the CEO of Say Yes to Profits. I am a virtual CFO for consultants and service-based entrepreneurs who desire to have more money, more profits, and pay less taxes. Today we're going to talk about becoming an S corporation. We're going to discuss what is an S corporation, the benefits of being an S corp, how to qualify as an S corp, how to convert to an S corporation, and then once all of that is done, what do you need to do once you have received your S corp election? So what is an S corporation? An S corporation is a business structure that have elected to pass the corporate income, losses, deductions, and credits to their shareholders. The shareholders will report the corporation's gains or losses on their personal tax return, and they are then taxed according to their individual income tax rate. What are the benefits of becoming an S corporation? When elected to become an S corporation, you eliminate the possibility of double taxations due to the business's profits. Now, as an S corporation, the profits are taxed directly to the shareholders. The S corporation generally pays no federal income tax, but the S corp must file an annual tax return with the IRS and the state in most cases. Now, how do you qualify to become an S corporation? Well, there are a few things that must be in place, such as the business must be a domestic corporation. The shareholders must be individual U.S. citizens or green card holders. The S corporation cannot have no more than 100 shareholders, and they can only have one class of stock. And all shareholders must consent to becoming an S corp in writing. And I'm going to deep dive into that in just a moment. Now, how do you file to become an S corporation? Well, to become an S corporation, you must complete Form 2553 that you see here on the screen. As I just mentioned, all shareholders must provide written consent by signing Form 2553. And on the second page of that form, each shareholder is going to identify their percentage of ownership in the company, as well as provide additional relative information. Now, Form 2553 must be submitted to the federal government no later than 2 months and 15 days after the start date of the tax year when the election is to take effect. So, for example, let's say that we are in the month of February, and you have projected that your net profit for the upcoming year will be $40,000 plus. Now you have until March 15th to submit the form for that calendar year. Once submitted, the S corporation will cover the calendar year from January to December. Now, within 60 days of submitting your form, the IRS will send you an approval letter by mail. Now, almost every state in the country recognizes the federal S corporation election, and a separate state tax S corporation election is not required. But you just heard that I said almost every state. A few states require an S corporation to file a separate form. These states are, as of the date of this video, New Jersey and New York. In Mississippi and Ohio, they require that an S corporation file a notice of such election with the tax commissioner between the first date of January and the 31st day of March of each year that the S election is in effect. But let's say that you forget to file by the deadline and you want to retroact your S corporation. If you miss the deadline, you can file for an IRS relief. The IRS relief will provide relief for late elections if your corporation can show that reasonable causes led to your failure to file on time. So for example, let's say that you weren't aware that you needed to complete Form 2553. Now it's time to file your taxes, and that entire time you've been operating as an S corporation. What do? Well, again, you would need to complete Form 2553 and provide a reasonable cause as to why you would like to apply for the IRS relief. At the top of the form, you're going to enter IRS relief. You can use Revenue Rule 2013-30 to your benefit in this case. The rule allows up to 3 years and 75 days from the date your business started to go back and ask the IRS to consider your company as an S corporation. Now, to qualify for the IRS relief, you must meet all of the qualifications to be an S corporation that I mentioned earlier. The only qualification you will not meet is that you did not file on time, but that is a one-time thing, so you should more than likely receive the IRS relief. Also, you must not have filed a tax return for the tax year in question. Now, as I just mentioned, in most cases, the IRS is relatively lenient in granting the relief and allowing a corporation to elect S corporation status for the previous years. Now, after you have completed everything and you're ready to operate as an S corp, what do next? Well, the first thing, all shareholders must pay themselves a reasonable compensation. You can actually be audited for not paying each shareholder a reasonable compensation. Now, at Say Yes to Profits, we prepare a comprehensive report that outlines the previous IRS court cases and other factors to determine a reasonable compensation. So if you need help with that, definitely let us know. In addition to that, the S corporation must pay employment taxes as well. And last but certainly not least, the S corporation must file its tax return by March 15th of each year. Now, I definitely like to leave you always with CEO Next Best Steps. So if your consulting firm or business is projected to earn more than $40,000 in net profit, your bottom line number, you want to immediately consult with your accountant about becoming an S corporation. If you need assistance with becoming an S corporation or determining your reasonable salary, contact SayYesToProfits.com today. And don't forget to subscribe to our channel and like this video. This is Octavia Conner, the virtual CFO for consultants. Until next time, say yes to profits. Toodles!